Hi everyone, I'm Roy and today I will be talking about a company, Immersion, ticker symbol IMMR. I will split this video into 4 sections: an overview of the company, research about upcoming earnings, and why I am bullish in this stock, financials, their patents, and future growth of the sector. Before I get into the company's overview, I will quickly mention why that stock soared as much as 30% in a day recently. According to Seeking Alpha, Immersion shares soared after Colliers raises the price target from $13 to $15 on thesis changer PlayStation 5 inclusion. Although this price target is still well above the price today, from the research I'll present in this video, I believe it will double or more within 2021. Now, onto the overview of the company. Immersion is a developer and licensor of touch feedback technology, also known as haptic technology. Their business strategy is heavily based upon the licensing of their technology. The fields they are involved as of today includes automotive, mobile, industrial, commercial home, gaming, and haptic hardware industries. However, this is only the beginning. As stated in their business strategy, they will continue to expand into emerging markets such as wearables, VR, AR, and more. In fact, Immersion has already begun developing for the sexual wellness market with this agreement with Field Robotics. This market is expected to reach $40 billion by 2025. By entering into this market, Immersion can take advantage of the great opportunities within this sector in the future. However, in the next earnings report, the focus will be on the PS5 controller. A further analysis on their involvement on the controller will be discussed in part 3 of the video. On to why it is likely that they will have great results in the next earnings, and why I am bullish in this stock, there are a couple reasons. Reason 1 being recently they have been involved in the haptic development of DualSense, the new controller for the PS5. Stated by Jared Smith in their recent earnings call, Immersion collects a royalty from each controller, and we expect more than one controller will ship per console over time to support multiplayer gaming and to replace worn-out controllers. This is crucial as, according to Matt, an executive director of games for analyst provider NPD Group, the PS5 achieved the highest launch month unit and dollar sales for a video game hardware platform in US history, breaking Sony's previous record with the PS4. More importantly, the DualSense controller also achieved the highest launch month in both unit and dollar sales in US history. The reason behind this can be further reinforced by the number of positive reviews, especially on the haptics of the controllers. These include from various large content creators such as MKBHD and more. Further, Phil Spencer, the head of Xbox, in an interview also praised the haptics of this controller. On to the second reason, past involvements with large companies has also led to large increases in earnings and stock prices. Back in 2018, Immersion had a settlement with Apple for the licensing of their technologies. This settlement will be discussed later where I talk about Immersion's patents and how certain companies infringed upon it. As you can see here, in 2018, the year they had a deal with Apple led to the year with the most considerable profits. And as stated in the earnings call in Q4 of that year by Nancy Erba, the mobile market in 2018 was very heavily weighted to an agreement we signed in Q1 with Apple. Further, when the news about the Apple licensing deal got released back in 2018, the stocks doubled. Now, because of these two indicators, it further bolstered my belief that the stocks will also rise soon. Most importantly, one of the strongest indicators which I believe shows that a company may do really well in the next earnings is through insider trading. Immersion bought back 4.9 million shares of their own company earlier last year. Further, stated by Jared Smith in the Q3 earnings call, they used $30.6 million to repurchase those shares, as well as stating that they will expect to see increasing positive cash flow generation in the coming quarters. All of this points towards the fact that they are confident in the future of the company as well as the share prices. Now on to the financials. In terms of their balance sheet, Immersion appears to have little financial risk as the company holds a substantial amount of cash with little to no debt. As up to September 30th in 2020, the total current assets were at $67 million and current liabilities were at $8.49 million, resulting in a healthy current ratio of 7.9. This means that the company has 7.9 times more current assets than liabilities to cover short-term debts. Regarding their income statement, the total revenue of $7.6 million for Q3 2020 was down 29% from total revenue of $10.6 million in the same quarter last year. Now, in Q3 of 2020, Jared Smith also stated that our revenue mix for each line of business typically fluctuates quarterly due to seasonal patterns. Thus, with the addition of PS5 controller sales, their revenue should be much higher in the gaming sector Now, this is furthered by the analyst Charles Anderson, where he stated Immersion's fundamentals are becoming far more predictable with 80% of their revenue coming from per unit royalties, double that amount from 4 years ago. Now, lastly, about their net income, it has increased. The GAAP calculated operating expenses of $5 million for the third quarter was down from the same period last year. This large cost reduction is from $2.7 million in lower litigation, patent-related, and general legal costs, and also $1.5 million lower in salary and benefits expenses, as well as $0.8 million lower in professional service costs. In conclusion, the financials of the company is looking strong for the future. However, as this company has a market cap of around $300 million on the date of filming, this small cap may lead to more volatile price actions, which is something to take into account when considering whether to invest into this stock. Now let's talk about why their patents and technology are irreplaceable. Remember when Apple introduced their 3D Touch for the iPhone 6 as well as the Tactic engine in their Apple Watches? Well, they were infringing on Immersion's technology patents. This may or may not have led Apple into a licensing deal with Immersion as discussed earlier in this video. Other than issues with Apple, they have sued large corporations such as Google for uses in their phones and Microsoft for the Xbox controllers. Now, lastly, about the sector as a whole, the global haptic technology market is estimated to grow at a compound annual growth rate of 14.44% during the year of 2020 till 2028. In fact, the main driver for the market is the increasing adoption of haptics in consumer electronic devices. Consumer electronics form the primary application for haptics technology. The consumer electronics segment is the highest revenue generator for the market. In terms of area of the world where there are significant growth, the Asia Pacific captured the largest market share of 44.99% in terms of revenue back in 2019 and is continuing to increase. China, the world's second largest economy, is forecasted to reach an estimated market size of $7 billion in the year of 2027, trailing a CAGR of 17.1% through 2027. This is in line with Immersion's strategy, as in the earnings call, they stated that they would continue to address the China market through their China Partner Program and continue to see revenue growth in that quarter. Lastly, this driver for consumer electronics can also be furthered by the rapid adoption of VR technology. As the haptics technology complements the immersion level of virtual reality devices, the growth of VR sector may positively impact the haptics industry. The global virtual reality market size was valued at $10.32 billion in 2019 and is expected to grow at a compound annual growth rate, CAGR, of 21.6%. from 2020 to 2027. In conclusion, I believe the minimum I would do with this information is to put this stock on my watch list and to purchase before the next earnings report. Personally, I'll be investing in this company in the near future and definitely before the next earnings report, as I believe it will be a huge catalyst for the future of this company. That's it for today, and if you like this analysis of this company, consider subscribing or leaving a like. Thank you.